Ladies and gentlemen, good day and welcome to the Q4 FY23 earnings conference call of MINDA Corporation hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference has been recorded. I now hand the conference over to Mr. Abhishek Jain from Dolat Capital. Thank you and over to you, sir.
Thank you, Jacob. Good evening, everyone. On behalf of Dolat Capital, we are pleased to welcome you to MINDA Corporation 4Q FY23 earnings call. We thank the management for providing us the opportunity. From the management side, we have with us Mr. Akash Minda, Executive Director of Finance and Strategy, Mr. Neeraj Mahajan, Group President, Marketing, Mr. Vinod Raheja, Group CFO, Mr. Anshul Saxena, Group Head Strategy and Merger and Acquisition, and Ms. Pushpa Mani, Lead Investor Relations. Before we begin, let me mention a necessary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainty that may cause actual results to differ from the anticipated outcome. Now, we hand over the call to Akash Minda for opening remarks. Post, we will start the Q&A session. Over to you, sir.
Hi, good afternoon. Am I audible?
Yes, sir, you are.
Okay, thank you. So, good afternoon, everybody. Thank you, Abhishek and Dolat Capital, for holding the conference call for MINDA Corporation. I would like to begin. Good evening, everyone, and welcome to the Quarter 4 and Financial Year 23 earnings conference call of MINDA Corporation. On behalf of the company, I thank you all for joining us on this conference call and hope all you are keeping safe and healthy. In fiscal year 2023, the overall industry experienced double-digit growth across vehicle segments except two-wheeler, where the growth had been sluggish due to rural demand and under pressure on the back of negative rural sentiments due to inflationary pressure, rise in vehicle costs, and increasing fuel prices. Despite the same, MINDA Corporation recorded another year of resilient and better than industry performance with revenue from operations of 4,300 crores, a growth of 45% year-on-year basis. EBITDA margin for the year improved by 83 basis points to 10.7%. We delivered double-digit EBITDA margin for the 11th straight quarter. Normalized PAT for the year stood at rupees 219 crores with a PAT margin of 5.1%. The growth was driven by addition of new customers and products, premiumization across products leading to increase in kit value and increase in business with existing and new customers. In line with the company's philosophy to reward its shareholders, the Board of Directors have declared final dividend 40% on the face value, that is rupees 80 paisa per equity share, taking the total dividend for the year to 60%, that is rupees 1.20 per equity share. Now, I would like to take you all to the key developments during the year. The company entered into 2 strategic technology partnerships with Daesun Electrics from Korea for advanced driver assistance systems and with Locorab for telematics software solutions. These partnerships not only make us complete solution provider, but also place us ahead of the technology curve. Second, at MINDA Corp, we are continuously committed to drive innovation. The company has filed highest ever quarterly patent filings of more than 20 patents across various business verticals, taking the total patent count to more than 250. Third, this year remained a marquee year for the two-wheeler smart key businesses, which continued to gain traction and clocked more than 10% of the total two-wheeler lockset revenue, with key customers including all the leading names in IC and EV two-wheeler OEMs globally. The company inaugurated the state-of-the-art plant in Q3 FY23 and is planning to add other plants as per capacity additional requirements. These plants do not only aim at increasing our production capacity and keep us closer to the customer, but are also well equipped with advanced machines backed by cutting-edge technology. Next, in line with the company's focus on its offering in the electric vehicle space, it added prominent new customers in the electric vehicle portfolio in domestic as well as export segment. In the financial year 23, EV order book accounts for more than 20% of the total order book. Our order book remains very strong, in line to achieve 20 to 25% year-on-year growth for the next 2 to 3 years. In the financial year 2023, MINDA Corporation generated a healthy lifetime order book of 7,800 crores, giving an annual revenue of more than 2,000 crores across segments and products. Out of this, 20% came from the EV industry and EV OEMs and platforms, representing our various products, growing acceptability and readiness for EV mobility going forward. During the year, we made a financial investment of 400 crores in Concall from open market, acquiring 15.7% stake. We have filed for CCA application for stake acquisition up to 24.5% at this stage, in line with all governance and compliance requirements. We continue to be very bullish on the instrument cluster business and as a product segment to grow. We are focused to solidify our market position by providing high-quality, innovative products and securing new business from our customers, including various products such as lock set, vehicle access, wiring harness, driver information systems, sensors, EV products, as well as others. Moreover, all our products are undergoing through premiumization, resulting in enhanced content value. Now, I will take you through the key highlights of the investor presentation. I request you to please refer to the presentation which is uploaded. I move to the slide 3, which is sharing about Spark MINDA Group or MINDA Corporation. At the group level, we are reporting about 5,000 crore company with 16,000 workforce, 34 plants, and having more than 9 partnerships in the automotive space. Going to the next page, shares about MINDA Corporation's global and domestic presence, which shows strong foothold on the domestic segment across automotive regions in North, West, and South, as well as international operations of Vietnam, Indonesia, and having office in Japan. Moving to the next slide of highlights of quarter 4 and full year performance. For the quarter 4 FY23, the revenue growth for the quarter continues to outperform the industry performance. Double-digit EBITDA margin for the 11th straight quarter on sequential basis. Total lifetime order book in the quarter stood at 2,000 crores with more than 11% export orders. Highest ever quarterly patents filing with more than 20 patents during this quarter. Two-wheeler smart key continued to gain traction with more than 10% of the total two-wheeler rocket revenue. For the full year, MINDA Corporation revenue growth of 45% year-on-year despite of challenging macro and microeconomic situations. EBITDA margin improved by 83 basis points to 10.7% on year-on-year basis. We won businesses across segments and EV, constituting almost 18 to 20% of the order win. 32 patents filed during the year. Total patents in the company now stand at 250 plus. Signed 2 technology partnerships for new technology products. Moving to the next slide, slide 6, which shows a snapshot of consistent and sustainable market-leading profitable growth. On the top part, there is quarterly revenue, EBITDA, and PAT. If I look at year-on-year, the revenue has grown by 13%. EBITDA has grown from 108 to 117 crores by 9%. And PAT, normalized PAT, has grown from 54 to 56 crores by 4%. If I look at the annual growth, from 2,976 crores, the company has posted 4,300 crores, which is a 45% jump. And in EBITDA, from 9.9 to 10.7%, in absolute terms, 295 crores to 461 crores, which is 57% jump. And PAT margins go from 137 crores to 219 crores, with 60% jump. Moving to the next slide, slide 7, which is the key business highlights and order wins across various products. Our new technology products of integrated vehicle access continues to lead the market. We have won orders for EV die-casting products for export as well as domestic OEMs. First time products on wiring harness for OBD2 norms. the new technology products in EV in the commercial vehicle, tractor as well as two-wheeler segment, and in the cluster division in the new technology of TFT and LED systems, LTD. These are the market businesses starting production in FY23. Moving to the next slide, which is showing a snapshot of the Minda Corporation. The total number of shareholders are at the end of this year are about 90,000. The promoters hold 65% and other institutions hold the remaining. On the left, we show the various customers and manufacturing facilities. Moving to the next slide, on slide 9, which shows the industry performance. Automotive sector grew quarter 4 year-on-year basis by 1%, almost flat. Two-wheeler degrew by 3%. On year-on-year full year basis, automotive, the industry grew by 12.5%, two-wheeler by 9%, PV by 25%, three-wheeler by 12%, CV by 28%, tractors by 11.5%. Overall, demand continues to remain across segments, despite of the various challenges on semiconductor and other macro concerns. Moving to the next slide, which is the revenue breakdown. By geography, India continues to remain the largest share with 84-85% in this year compared to last year. Europe and North America are about same 8 to 10%, and Southeast Asia are about 6 to 8%. By end market, the four-wheeler, the two and three-wheeler segment continue to be about 44 to 45%. Passenger vehicle is about 14%. Commercial vehicles are about 25 to 30%, and aftermarket is about 12 to 15%. By business vertical, the mechatronics and aftermarket is about 48%. Information and connecting systems, which is wiring on it, about 36%, 16%. Moving to the next slide, which is slide 11. It shows from last year to this year, the vehicle access business continues to be about 26%, wiring harness is about 30%, clusters is about 12%, and DTD or die casting is about 17%, and others mark 15%. So we are still the market leader in two-wheeler lock set and wiring harness business, pioneer in keyless entry solutions, moving from mechanical structures to incorporate latest technologies in TFT displays. The company is one of the key players in two-wheeler and CV segment. Of late, also and gaining traction in CV segment. In die casting division, we focus on niche products which are more margin accretive. Moving to slide 11 on the order book status. As showed earlier, we have booked orders worth 7,800 crores this year, where replacement business is about 3,600 crores, and lifetime new business is about 4,200 crores, and 20% of this is marked by EV. More than 1,000 crores worth of export orders across various products and segments were booked during this year. Moving to the next slide of the consolidated performance for the year. On quarter 4 year-on-year basis, the revenue grew from 948 crores to 1,075 crores, giving a year-on-year increase of 13.4%. EBITDA grew from 108 crores to 117 crores, with YY increase of 8.5%. And EBITDA margin went from 11.4% to 10.9% across various challenges. The PBT grew from 72 crores to 67 crores. And the normalized PAT was 54.56 crores. On full year basis, the total revenue of 2,976 crores is grew to 4,300 crores with 45% jump. EBITDA has grown by 56.7% from 295 crores to 461 crores. For full year, EBITDA percentage has grown from 9.9% to 10.7%. Normalized PAT has increased from 137 crores to 119 crores, up by approximately 60% and 50 basis points. On domestic front, in quarter 4 and full year, industry grew by 1.7% and 12.5% respectively, while MINDA Corp grew at 13.4 and 27%. Exports grew in line with the top line going forward. It continues to be driven by addition of new customers across geographies. The EBITDA margin was delivered in spite of the commodity prices showing rising trend and semiconductor supplies have started easing out. Board of Directors have declared a final dividend of 40%, that is 80 paisa per equity share. Total dividend for the year is 60%, that is 1.220 rupees per equity share. Slide 14 on the consolidated leverage position. By comparing the year-on-year, net worth of the company has increased to 1,591 crores. The long-term borrowings stand at 235 crores, and the short-term borrowing is at 318 crores. Gross debt overall has gone from 391 crores to 553 crores. Overall, the net debt to net worth is at comfortable 0.25x. Capital employed at the group level is about 1,530 crores. ROC has increased from 18.4% to 20.8%. Moving to the next slide, which is slide 15 on the business vertical performances. If I look at the business vertical, which is the mechatronics and aftermarket, on a quarter-on-quarter basis, the sales has grown from 547 to 535 crores, and EBITDA has gone from 13.8 to 13.9 crores. Revenue grew by 10% on year-on-year basis due to increase in share of business and premiumization against market growth of 1.7%. Margins marginally declined due to stagnancy in exports, mainly due to geopolitical situation in Europe. On full year basis, on the right side, this division has performed 1,687 crores to 2,061 crores, from 12.3 EBITDA percentage to 13.5%. In the information and connected systems, it now consists of wiring harness and instrument cluster and sensor. On the revenue front, it has gone from 462 crores to 540 crores on year-on-year basis, and sequentially from 522 crores to 540 crores. The revenue was supported by demand in domestic market. Margins improved due to wiring harness margins continuously on the rising trend due to various factors such as component localization. MINDA instrument margins improved mainly due to semiconductor supply chain easing out and better operational efficiency. On the full year, the revenue stands at 2,239 crores with 8.2% EBITDA margin. Moving to the next slide, it shows the journey of new alliances in the recent past. So this is just to share with you again that in this financial year, we have signed 2 partnerships in ADAS solutions and telematic solutions to complete our technology edge and focus on offering products as system solutions to the customers. Now moving to the strategic pillars on slide number 18, we continue to focus on enhancing the core. Innovation and technology continues to be the core in terms of the R&D center and partnering up with global players. First, how we can enhance electric vehicle growth opportunity, and all the MINDA Corporation products are EV agnostic. Strengthening the passenger vehicle offerings with in-house as well as partnerships. Transforming and becoming complete solution provider, focusing on cost leadership in manufacturing and thought leadership when it comes to technology. Premiumization and product innovation in all business segments continue to drive content per vehicle, and most importantly, deliver better than industry growth and continue improve margin profile. Moving to the next slide on the engineering capability, we are now more than 250 patents. More than 2% continues to be the R&D spend, and the following year will be continue to increase further. And we have more than 500 engineering counts all across various technologies and products. Moving to the next slide on the electric vehicle opportunity, this is just showing the various products that we offer in the two-wheeler segment, various old and new customers that we continue to add, and the potential kit value going from 4,000 rupees to about 20,000 rupees in our legacy and products that we are already manufacturing and supplying, as well as which are under development. Moving on to the next slide is the value proposition of MINDA Corporation. So just in the interest of time, I will skip this. But the interest and the focus continues to be on how we can perform sustainable and grow year on year and quarter on quarter, delivering our customers and focusing on innovation and technology. Last but not the least is our immense focus on the ESG framework and how to become carbon neutral in the next years to come. MINDA Corporation has also won various awards from our customers and across various social responsibility campaigns that have been conducted across in India, but not only in India, but across the world. With this, I would like to conclude my presentation, and now I would like to open the floor for any questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abhishek Jain from Dolat Capital. Please go ahead, sir.
Hello. Hello. Am I audible?
Yes, Abhishek.
First of all, congrats for a strong set of numbers in this tough time. My first question is related with the information and connected system business. So, how do you see the growth going ahead in the wiring harness business, and what kind of the margin guidance do you have in this business?
Yeah, Abhishek, wiring harness continues to be the nervous system of the vehicle. And if you see the latest trends from BS4 to BS6 and in various segments such as chapters like moving concurrent BS3 to Trend 4, Trend 5, electric vehicle mobility, more and more premiumization happening in the car, the content of the wiring harness is set to grow forward and even more. It depends on the segment as well as on the ICE or EV type of a vehicle. But technically, again, I will not be able to give you a number on the particular growth, but it is going to be in line or even better than the industry growth, having more and more content per vehicle, such as connection systems in the electric vehicle mobility and others. On the margin front, we do not give future guidance, but again, our endeavor is to continue to improve the performance on the wiring harness due to the various initiatives that we have been continuously taking on manpower productivity, component localization, strengthening our plants, and production process.
So, as the semiconductor prices is going down, can we see a double-digit margin in this business, wiring harness business?
So, semiconductor is more related to our electronics business, which comes to the clusters and sensors, and now the keyless solutions and the electric vehicle mobility. In wiring harness, yes, there are some semiconductors depending on the end application and the products, but wiring harness is not too much impacted when it comes to the semiconductors. It is the other product lines that have more electronics.
Okay, sir. And in wiring harness business, how was the mix in FY23, two-wheelers, CVs, and the passenger vehicles and AST?
So, largely it remains in line with the group overall segmentation. So, about 50% comes from the two-wheeler, about 25 to 30% comes from the commercial vehicles, and the remaining comes from off-road and other segments.
Okay, sir. Thanks. That's all from my side.
Thank you, Abhishek.
Thank you. A reminder to all participants, you may enter star and 1 to ask a question. The next question is from the line of Radha from B&K Securities. Please go ahead.
Hi, sir. Good evening. Thank you for the opportunity. Sir, my question was on the mechatronics division. So, with respect to the lock sets, I wanted to understand what is your share of business with top customers like Bajaj, HMSI, TVS, Hero, Suzuki?
So, ma'am, I will not be able to share the exact numbers, that is the confidential information. But largely, wherever and whichever product MINDA Corporation works in, either with the customer or in the segment, we are one of the leaders having more than 30 or 35% share of business across segments. In the two-wheeler lock set, which is higher, to more than about 40%, if I may say. At a call customer segment level, it may vary from different customer to customer.
Understood, sir. But could you tell us where the share of business is higher, from which customers and from which it would be lower? Like maybe higher from Bajaj and lower from TVS. Is that the case?
Ma'am, I think you are putting a question in just another way. As I told you, at the industry level, it is more than 40%. I will not be able to give you a breakup due to confidentiality with our customers on the customer-wise breakup.
Okay, sir, no worries. So that Honda Activa H, the new series is launched by HMSI. So I believe they have a different kind of lock set. I'm not sure whether we can call it smart locks, but maybe an advanced lock system. So are we supplying that product to them?
Ma'am, as I said, I cannot disclose a particular customer name for the product. But yes, Honda is one of our customers for the keyless solutions.
Okay, sir. So then from the industry perspective, I believe in your opening remarks you mentioned that 10% of the revenue is from smart locks. I mean, in the industry you're talking about, I mean, what is the penetration of smart locks in the industry today, and how do you see it in the next 3 to 4 years?
Ma'am, currently the industry in India is about 5 to 7% is the penetration of the smart access solutions. Of course, with exports and the large premium bikes and the EVs coming in, the penetration is much higher compared to the lower end segments and the commuter bikes. In the next,
two-wheelers, is it?
Yes, that is right. For the two-wheelers, and in the next midterm to long term, this is definitely will be increasing from two perspectives. The one, when the premiumization of our vehicles is happening, customer demand is focusing more on personalization and convenience and comfort, moving from high-end to the lower-end variants of the vehicles, and of course the export market continuing to grow as well.
So how much do you see this 5 to 7% in the next few years?
Ma'am, it depends again, but technically we can say in the next midterm to long term, about 30 to 40% should be the target that we have in mind.
So, sir, any models that you can name which are having 5 to 7%, I mean, which we can call as smart locks? You may not be supplying to them. I'm not asking about your supplies, but I mean, what are the models that are currently using smart locks in the two-wheeler industry in the Indian market?
Ma'am, for example, there's Ola Electric, there is Hero Vida, there are some TVS products, there are Bajaj Chetak, so these are some of the models.
Okay. So Bajaj Chetak, we'll call that as a smart lock only, right?
That's right.
The button and they have that button system. Okay. Understood. And so what would be the price difference you said between normal locks versus smart locks?
Ma'am, a normal lock set is about 300 to 400 rupees, and in the smart lock or a lock or a keyless solution can depend on the various of configuration, but the average rate price is about 2,000 to about 3,000 rupees.
Okay, sir. And so lastly, what would be your maintenance capex per year?
And typically our depreciation is in the tune of about 4 to 5%, and to particularly speak about maintenance or regular capex, is typically about 1%.
Maintenance capex 1%?
Yes, maintenance and other regular capex, not particularly maintenance capex.
So 1% of what?
The revenue, ma'am.
Okay, understood. Okay. Yes, sir. Thank you so much for answering the question. Thanks. All the best.
Thank you.
Thank you. The next question is from the line of Dhananjay Kumar Mishra. Please go ahead, sir.
Thanks for the opportunity and congratulations on decent set of numbers. So we just wanted to understand in EV segment, this kit value which you have been mentioned. So from traditional ICE vehicle, and then we are close to, I mean, we can provide the kit value up to close to 8 to 10,000. So, have we reached this kit value for any of the customer as of now, or where we are in terms of kit value with the particular customer?
So, as I mentioned, this is the potential maximum kit value that we can offer. Currently, if I may say that we are offering somewhere between 10 to 12,000 is what we have currently reached, and which is under mass production.
Can you repeat? I didn't get the number.
10 to 12,000.
That is a potential we can, but are we have we got order from any customer to get this much kit value from for particular model?
Yes, we have.
Okay.
I cannot name the customer or the model, but
I was just asking. I mean, whether because we have increased this mechatronics, we have increased our this thing by 2,000 to 3,000, and then in information and connected system we have increased to 2,000. So we can provide 8 to 10,000 kind of products for EV. So that's what I asked. And in terms of just for the earlier question, what was the total capex put together in FY23, and whether it is maintenance or new capex, or what is your plan if you can give for FY24 as well?
So for the last year or for the full year FY23 is 250 crores.
Okay, and breakup you can give specifically in which segment we have?
So breakup is generally, if I may say, is about 2 to 2.5% goes into the engineering and R&D. About 1 to 1.5% goes in the regular and maintenance capex. About 1 to 2% goes in our plant upgradation or new plants or other such things like that. This is the breakup of the more like 4 to 5% of the capex.
So for growth, we don't need to increase capacity for our particular plant capacity. This is regular maintenance and upgradation we'll do. We'll take care of growth for next 2 years.
No, so different plants and different product lines have different capacity utilizations. So mechatronics or business vertical one in the keyless solutions or in the lock set have about 55 to 60%. In the wiring harness, again, we have about 68% or 60% capacity utilization. In various plastics, about 80%. And the EV division is currently still only at about low 25 to 30%. So this is just some of the numbers that I'm giving you as we're coming up with the new plants, new low-cost automation, as well as the focus on with this current infrastructure, how we can increase our revenues and having flexible lines and other such innovative ideas on how we can sweat our assets more and generate more and more revenue and profitability.
Okay. And lastly, one question with this to die casting. If you could give the quarterly revenue number for die casting and for the full year also. How it has grown.
Yeah. For the quarter 4, for the die casting is about 185 crores. For the full year, for the die casting is about 730 crores. On the full year basis, in FY22, it was 522 crores. So on full year basis, it has grown by 40%.
Okay. Thank you. But just one more question with respect to recall. So we have shown intent to increase our stake in the company. So are we also in talk with them? I mean, for any advanced talk is happening, or just it is board approval?
It's a financial investment, Mr. Dhananjay, and we have applied for CCI in full governance and compliance. So that's where it basically stands as of now.
Okay, that's all from my side. All the best. Thank you.
Thank you.
Thank you. A reminder to all participants, you may enter star and 1 to ask a question. The next question is from the line of Mihir Desai from Pendulum Investments. Please go ahead.
Thank you for the opportunity. Sir, I had 2 questions on the macro front. So I just wanted to check with you that how has the global market landscape impacted your company's performance?
So besides India, if you look at various reports, I think next 10 years are India Inc. And due to the various concerns of the political issues, COVID, etc., of course, the other markets are under pressure, whether it's America, Europe, or other such countries. So coming to Minda Corporation, definitely exports for this particular quarter are under pressure. But our interest and focus is always to keep getting new orders. So even if when there is a pressure from the export market, we try to outperform them.
Sure, sir. Sir, also I just wanted to check what are the steps that we are taking to address the supply chain challenges and disruptions.
So there are various activities or actions and strategies are in place. First, for commodity inflation or indexation, we have back-to-back agreements with our customers, and we're strategizing with our suppliers impact in terms of time and amount. That's number one. Number two, of course, there are various strategies when China plus one de-risking or that are happening. So we are looking at localization of our components to our various suppliers and supplier partners. As an organization, now we are heavily working on various important topics such as the quality, cost, and competitiveness with our business partners. So as a group, we want to take up our supplier partners the way our OEMs have taken and groomed us and grown us over the years. That's our strategy, so that they grow with us to support us the next generation of technologies and the requirements that are there. From a financial perspective, financial health perspective, quality, operations, and of course, all compliance perspectives, including ESG as well.
Sure, sir. Thank you. Sir, also, I just wanted to check what is the progress on ongoing research and development initiatives?
Sorry, my friend, I think it's a very general question, but I share that we continue to focus on our own core products and areas in technology. The idea is that how we can focus on the case or space which is connected, autonomous, shared and electrified and electrification. So all these products are going to the premiumization route and using the comfort, convenience, and individualization and personalization. So we are now focusing on how all our products can be moved and taken shape with these requirements and trends. So we are going to, and we are adding all our products into electronics and adding with our own design center on how we can focus on personalization, surfaces, and different touching themes on that aspect. We continue to also have run multiple new R&D and innovation products and projects which are totally advanced and new for not only India but for the world, which are under the incubation phase or R&D phase for various technologies in our own product line, and how we can look at into the new technologies and new partnerships perspective. On the electric vehicle space as well, or the electric vehicle mobility, we continue to add products in-house as well as to partners, to technology partners as well as engineering centers on the product capability. Also, as an organization from our R&D center, we are working on filing more and more number of patents and how to improve the design quality in automotive and coming up with new trends and technology that you will see in the new vehicles, whether in two-wheelers or four-wheelers.
Sure, sir. Thank you. Sir, lastly, one broad question which I wanted to ask you is that, sir, as an investor, say currently 5 years down the line, what would be the strategy of a company and, from current where we are, how do you look at the company, say 5 years down the line, sir?
So, at a very large level, we would like to move from components to a complete system solution provider. All the product lines and the domains, what we are doing is we would like to develop different technologies and complete a system solution offering with respect to the 3 or 4 product lines and the product domains which we are into. We're currently running many products and how we will be consolidating and integrating them to offer a system solution. From that perspective, also having the downstream plan in terms of our operational excellence and becoming a cost leadership in that respect. And of course, all the value chain when it comes to the people and employees and partners. On the numbers front, of course, we would like to move ahead of the market. If the market is going flat, we would like to be higher by 10 to 15%, and which we have consistently showed over the last 2.5 to 3 years. And in my opening remarks, I also mentioned that we would like to, as an organization, are committed to grow above 20 to 25% year on year as MINDA Corporation. Most importantly, it has to be a sustainable and a growth journey quarter on quarter.
Sure, sir. Thank you, sir. If I have further questions, I'll join them.
Thank you.
Thank you. The next question is from the line of Harish Shah from HS Investment. Please go ahead.
Thanks for the opportunity. I hope my voice is audible.
Yes, it is.
Yeah, thank you so much. So this is basically with regards to how do you see operational efficiency kicking in? Are we taking any digital transformation initiative? And second question is with respect to our international expanding our international footprint. If you can guide any steps that we have taken for that.
Yeah. So again, we are into the manufacturing business and automotive. So definitely operational excellence is the most important forte for us. And especially with the ongoing products and technology changes and the customer demands, we have to fall much faster in line. For these initiatives, we are firstly setting up and improvising our state-of-the-art plants and improving end-to-end traceability, low-cost automation, robotics, business excellence, IoT, and all such digital control in the process. And we are partnering up and already have partnered up with various external companies to strengthen this. And also we have a very strong internal team who continues on the group business excellence is what we call. Sorry, can you repeat the second question, please?
So my second question was with regards to our strengthening our international and global presence. If you can just provide any update, any direction towards that aspect.
Yeah. So, of course, there are two poles to that. We are primarily in India, and India is what we are focusing on, how we can firstly increase the exports, contents and products from India to all over the world, looking at the various good opportunities that are coming across the Indian continent. That's number one. We do not have plans to acquire any companies which are having large operation base overseas. So our focus remains on how we can be in India and work for the exports and have a larger share of revenue from the export businesses in the next years to come.
Okay, thank you. And my last question is with regards to our mechatronics division. How do you see the margin panning up in the coming quarters?
So in the mechatronics division, in our presentation also, we have showed at about 13 to 14% EBITDA. While of course we want to grow this, and we will see in the upcoming quarters and with the increase in the content, electronics, etc. First and most important is to stabilize this, and then we will continue to improve it year on year. With the change in technology, we need to first utilize our capacities, get adjusted to the new volumes and the customer demand, deliver most importantly, and then focus on growing year on year.
Okay. Thanks for your detailed, reply answers, and wish you all the best. Thank you again.
Thank you.
Thank you. The next question is from Saral Seth from Insect Securities and Finance Limited. Please go ahead.
Yeah, hi sir. Congratulations for good set of results, and thanks for taking my question. So my question pertains to how do we plan to increase our content per vehicle from here going ahead over the next 2 to 3 years across segments, because we are seeing decent premiumization which is happening across the board. So do we still feel that there is room for further penetration in our products to increase content per vehicle?
Yes, absolutely. It is not even the beginning, if I may say, Saral. As we see the bikes, cars, etc., are all going through premiumization route. And if I speak about our products for vehicle access, so from a traditional lock and key, as I mentioned earlier, we're now moving to keyless solutions, and this is only the 5% to 7% penetration as of now. going forward, of course, it is only going to increase. When it comes to the wiring harness content and increasing kit value, as I again mentioned earlier as well, the number of connection systems, high voltage cables, more complex wiring harnesses are definitely going to lead to increase in the content per vehicle. In the instrument clusters and space, analog clusters are moving to digital and DFT clusters with more of personalization and comfort and convenience, which is more of a dashboard or a cockpit and more driver information system and connected. So this is how the clusters are now moving, which all of us would like to get connected to our phone and others. That is again a very less penetration, and all these technologies are into the only high-end vehicles, whether in two-wheelers or four-wheeler, and slowly they will, or rather fast, they will come into the low-cost commuter segment, which is where the volume lies across India. Other product lines that we are also continuously adding is, again, in terms of sensors, we're increasing the portfolio. Interior plastics division, we've added many new products such as ADAS, shaft and antenna, flush door handles, and other various technologies, particularly in the EV space and electronics of telematics, intelligent transportation. So there's a vast array of products which are now moving from a traditional car or a two-wheeler to a high-end connected, personalized and advanced vehicle. So this is how the penetration will increase and more and more kit value from the corporation will increase.
Right, sir. That was very detailed answer. Sir, my second question is on the aluminum die casting. How do you see the business shaping up over next 2 to 3 years? We have done well to ramp up this business. Is there any competition in this business, or you feel that there is enough room for growth?
Well, definitely a lot of opportunity when it comes to the lightweighting aspect, because when more and more electric vehicle mobility is coming in and the world is speaking about emission systems and other such things, which is where the aluminium castings or the die casting comes in. And as I would like to again share, MINDA Corporation Die Casting Division had a 40% year-on-year growth in the last year, and more exports coming in going forward. So definitely there is a room for growth. We would like to continue to focus on our domestic as well as export market. We have a strong team with a good amount of excellent amount of technology to cater to the need. We are well placed for the next 4 to 5 years with respect to any technology that is needed in the lightweighting solutions.
And sir, this aluminum die casting, how much would be domestic and how much would be export, sir? If you can share that number.
So technically, you may say about 60% is domestic and about 35 to 40% is exports.
And would it be fair to assume, sir, that the margins in this business are higher than the blended margin, sir?
Yes, of course. But I would like to also highlight that the capex and the below EBITDA numbers in terms of depreciation are also higher in this business compared to others, because it is a highly capital intensive business.
And sir, any new product launches which we are doing in aluminum die casting wherein we can gain market share or take new orders?
Yeah, the focus is definitely on electric vehicle mobility. There are various players and there are many opportunities that are coming in again from the motors or battery package housing or other converter businesses. So there are various product lines that we are working on for the EV die casting products.
And so my final question, if I can squeeze in, sir, there were questions about margin trajectory, but I would like to understand what are the levers for margins going ahead. Is it like sustained cost optimization, or is it raw material tailwinds, or is it better realization-led operational efficiency which could come in, sir?
So I think you answered all your questions yourself, but it's a mix of all. And again, while there are pressures from the raw materials, wage increase to various states, like we are seeing all across, the margins definitely continue to be under pressure. But as an organization, our focus is on how to gain cost and leadership in the manufacturing from in-house all the way to our suppliers. So definitely the indexation with our partners, how we can focus on increasing productivity and manpower productivity improvement, more and more dependent on automation and robots is something that our team will be looking at in future, as well as the products that we are going to be working on and are working on. Of course, we will be needing much more automation rather than manual this thing, which will be reducing the manpower dependency and increasing the quality as well as productivity and efficiency and profitability.
Sure, sir. Thank you. That was detailed answer. I'll fall back in queue.
Thank you.
Thank you. The next question is from the line of Radha from B&K Securities. Please go ahead.
Hi, sir. Thank you for the opportunity once again. So, my question was on the aluminum die casting side. So, we just wanted to understand, I believe that as we move on from aluminum to zinc and to magnesium, so, I mean, the value content or the product improves. So is there a margin difference if we are providing aluminum die-casted products versus zinc and magnesium die-casted products, and what would that be?
Ma'am, very challenging question. But again, we are primarily into aluminum castings. We are not into magnesium casting. Of course, there are both pros and cons when it comes to the technology per se, but more importantly, the application of each of the zinc or aluminum or magnesium casting plays an important effect. Honestly, I cannot comment on the profit margin across all three.
Okay, sir. And so, I mean, if we see the magnesium die-casted products, I mean, is the industry, or do you believe the industry will slowly start moving to these magnesium die-casted products, at least in the premium vehicles? And if yes, then what is the penetration now? And I mean, if the industry moves towards it, will it start with the passenger vehicles and so on?
Ma'am, magnesium casting is a very difficult process, and it is very, safety critical, if I may say, compared to zinc or aluminium by the nature of it. So there are not too many players in India who do that. But yes, as a technology, it does exist. But actually, the application needs to be validated and tested, which will take many years to come, in my opinion, as an individual.
Okay. And so lastly, out of the components that we make in the aluminum die-casted products, I mean, what percentage of that would we be making for products that are in the engine subcomponents or transmission subcomponents and components that will not be required in the EV engine? And what would be our strategy to, when the industry replaces those products, what would be our strategy to cover that part of the revenue?
So, ma'am, firstly, again, these are both types of products that we make. Firstly, they're IC engine related. Then there are EV, batteries or motor related. And then there are products which are EV agnostic or engine agnostic, which does not matter whether it is a engine. So there's a variety mix and across segments. Exports is also again on the IC engine side as well, which is also growing. But we are very clearly launching new EV die-casting products, which will not hamper our IC engine products in the casting space.
Understood, sir. Thank you, sir, for answering my question. All the best.
Thank you.
Thank you. The next question is from the line of Monica Arora from Sharegreen Wealth Advisors. Please go ahead. Ms. Arora, your line is unmuted. Please go ahead with your question. As there is no response, we move to the next question. The next question is from the line of Rajesh Kumar from Reliance Wealth. Please go ahead.
Hi. Thank you for taking my question. My first question is on the working capital. How do you see in future your working capital days to evolve? What are the company's strategies on that?
So, the challenge in the automotive industry is continuously increasing the working capital. Like one of the key metrics is that we also monitor and working towards that. And hence, as I mentioned, one of the important factors in that is our suppliers or our creditor partners. This is where we are working with them on how we can strategize to decrease our inventory days as well as their payment terms as well. I mean, there are, of course, MSME norms which the government has set for 45 days and all. So which is one aspect that we are working on across various segments. Number two is, of course, on our working progress inventory and FG inventories that we look at. So inventories definitely is an important aspect with more and more imports due to the electronics now coming in and the customers mandating and requiring us to have a high number of lead time items in our inventory. That is where the inventory number of days go up. When it comes to the customer aspect of it, definitely there are set norms. Customers are good paymasters and the traditional ones. There is no issue in that. But yes, there in some cases we manage them appropriately, if in case. But we are constantly, reaching out to them on how to reduce our debtor days on that aspect. So, of course, if you see, yes, our working capital days have gone up from 30 to 40. But we are working on these fronts, as I mentioned, to come down significantly.
Thank you, sir. So my next question is on we have entered into 2 strategic partnerships in FY23. Can you help us in giving some color how this has panned out so far and their potential impact on the business going ahead?
So when it comes to the Decent Electronics, it is on the ADAS solutions. This is a company from Korea, and what we are here targeting now is the basically L0 application in India from that front. So currently our team is working with our Korean counterpart on the application for the Indian environment as well as with the Indian end customer usage. That's what we are continuously working on because the products that are developed are for the Korean or international usage. That's one. On the second side, of course, we are working on the customers and demonstrating our samples putting onto their vehicles to get more and more interest into that front. When it comes to the telematics Loconav company, as MINDA Corporation was always offering the hardware and Loconav is offering the cloud and the software solution to that. So as a joint system solution offering, we are working with various partners, with the customers to offer them a complete solution on this aspect. So, of course, our products are in the market, fitted on the vehicles, whether in EV or in IT engine segments.
So, my next question is how about your targets for the strategic partnership and especially post-recall? How will you be able to finance it?
So, as I mentioned, this is a financial investment. So, we will see when the opportunity comes what will be done and what can be done. But of course, we are much more confident on our performance and our balance sheet than ever. With the way we've already explained before, is that you can see the numbers and the next year targets are also much, much higher for us, and we as an organization are committed to deliver more and more free cash flow. So we will see when the opportunity comes, whether it is any and all JVs or TLAs or M&As, and we will evaluate them at the right course of action. But as an organization, we are focusing on bringing in new partners through JVs and TLAs, for completing our system solution and offering advanced technology. And we will come back to the market and to you, whenever there are developments, which will be soon. Of course, when it comes to M&A, we are open to all opportunities that come our way. We have the full bandwidth and have developed the management capability to grow further through M&A route as well. But yes, we are very clear on what we are not going to do. We are not looking at any companies which are outside India and are also in the product range or product lines of MINDA Corporation, which are the domains that we are already working in. So there are some clear norms that we have set up for M&A as well as technology assistance and partnerships.
So on ROCE, what is the level you are targeting in the longer run, and what are the strategic levers or your strategies to achieve the same?
So our ROC is again currently moved from, if you see over the last few years, we have gone from 15% to 20% this year in the last 3 years only. As if you look at the FATR of the organization, we are somewhere on the 4.5 to 4.2 to 4.5 times, and this year we have done about 0.4 times. So with the nature of the products and our product line strategy, this is how we continue to invest in the products which are going to continuously give us higher ROC numbers. And this is a key parameter and a metric before any capital allocation that we do for any new project or even a new partnership or a plant.
Thank you, sir. This was my last.
Higher than 25%.
Okay. Thank you, sir. That was my last question. Thank you.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Akash Minda for closing comments.
So thank you very much. Going forward in FY24, we are very confident of doing better than the industry, or performing the industry with our own capabilities and technology and customer engagements. We continue to focus on delivering numbers and performance on consistent and sustainable basis. And we are developing our ability to navigate the market challenges by relentlessly focusing on new products, R&D, innovation, and strategic tie-ups to cater to the evolving demand of the automotive space. Our strategic approach will remain on fortifying our core products and expanding our products and customer base, both by attracting new clients and deepening our relationships with the existing ones. We are fully poised and confident of margin-accretive growth in the next year to come. Thank you for your support.
Thank you. On behalf of Dolat Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.